Global shipping through the Strait of Hormuz is facing one of its most serious disruptions in years. Shipping giants have either suspended new bookings or halted transits through the Gulf region amid escalating tensions with Iran. The choke point at the center of this crisis is the Strait of Hormuz. With threats to commercial vessels rising and insurance providers reassessing risk exposure, operators are now prioritizing crew safety and asset protection. Some vessels are holding position while others are rerouting via the Cape of Good Hope, which is a longer and far more expensive journey. The immediate impact is reduced traffic, delayed cargo movement, and rising uncertainty across global supply chains. The disruption is already translating into measurable economic strain. Oil prices initially surged on fears of a prolonged blockade, with Brent crude briefly spiking as traders priced in potential supply constraints. Although prices have since eased slightly after the United States signaled it would support container transits in the region, volatility remains elevated. Shipping costs have jumped sharply. Tanker day rates in the Gulf region have multiplied in the recent days, and war risk insurance premiums have reportedly surged as much as 10 to 12 times the normal levels. In some cases, insurers have withdrawn coverage entirely, effectively creating a financial barrier to trade. For import-dependent economies, particularly in Asia, the stakes are high. Higher freight and insurance costs eventually translate into increased fuel prices, costlier consumer goods, and renewed inflationary pressure. Even without a formal closure of the strait, the economic consequences are already unfolding. The key question now is whether normal shipping operations can resume and how quickly. The United States has indicated that it may back container traffic moving through the region, a move that temporarily calmed oil markets. But market participants remain cautious. Security guarantees on paper do not automatically restore insurer confidence. Without affordable war risk coverage and credible de-escalation on ground, most commercial operators are now unlikely to resume full operations through the Strait of Hormuz.